Margex Guide. Part 2. How to open closed positions. Let's move on to the trade section. Margex offers an intuitive trading terminal that allows you to open both long and short positions, regardless of market direction. Margex also aggregates liquidity from a variety of liquidity providers, resulting in a deep order book with tight spreads, making it easier to open and close positions. Now let's get to the main topic of this video, how to trade on Margex. On the left side of the trading terminal, you'll find the trading section. First, let's select the collateral for our trade. In this case, we will use USDT. Moving slightly to the right, we select the trading pair we plan to trade. Margex offers a variety of trading pairs, and you can choose any pair you prefer and start trading. In this video, we will be trading the BTC-USD pair. On Margex, you have the flexibility to trade any available pair and use other cryptocurrencies in your wallet as collateral. For example, if you want to trade the BTC-USD pair but prefer to receive your profits in Bitcoin, Litecoin, XRP, or any other cryptocurrency, simply select the desired currency in the upper left corner. It's that simple to get your profits in any currency, expanding your trading possibilities. However, in this video, we will select USDT as collateral for trading the BTC-USD pair. By default, the order type selected is a market order. This is one of the simplest and most intuitive order types, where the trade is executed at the best available price at the time. Next, we need to choose the margin mode: isolated margin or cross margin. Cross margin mode. All cross positions under the same margin asset share the same cross margin balance. In the event of liquidation, your entire margin balance and any remaining open positions under that asset may be forfeited. Isolated margin mode. Manage your risk on individual positions by limiting the amount of margin allocated to each position. If the margin ratio of a position reaches 100%, the position will be liquidated. What is the difference between isolated margin and cross margin? Let's compare 3 identical trades and their liquidation prices. Each trade has a size of $1,000 and is opened at the same price of $50,000. First trade isolated margin with 5x leverage. With lower leverage, such as 5x, more funds need to be frozen as collateral for the trade. As a result, the liquidation price will be far from the entry point, reducing the risk of quickly losing your entire investment in case of unfavorable price movements. Second, trade isolated margin with 100x leverage. When using maximum leverage like 100x, only a minimal amount of funds is required as collateral. This allows you to open larger positions, but the liquidation price will be much closer to the entry point. Even small market fluctuations can lead to a rapid liquidation of the trade, resulting in a complete loss of your investment. Third trade. Cross margin with 100x leverage now. Let's look at the most interesting part. In the previous examples, we discussed trades with isolated margin. In the case of cross margin, there is no fixed liquidation price. Here, the liquidation price depends on the total amount of funds in your account. In cross margin, all available funds in your wallet are used as collateral for the trade. This means that if the price moves against you, you can lose not only the funds invested in the specific trade, but your entire account balance. This approach allows for more flexible trading strategies, but it also significantly increases the risk. So, what is the fundamental difference? With isolated margin trading, you control your potential losses, which helps reduce risk. The margin for each trade is separated from the rest of your funds. Moreover, on Margex, you can adjust the leverage of an already open trade, which allows for better risk management. In cross-margin trading, you risk losing your entire account balance on a single trade since all your funds are used as collateral. However, this also provides a more flexible liquidation price. By increasing your account balance and consequently the collateral for the trade, you can more precisely control the liquidation price. Let's take a look at how the liquidation price level changes when adjusting the leverage to 5x, 10x, 25x, 50x, and 100x. You can add or remove margin to positions using this mode. In this video, we will select the isolated margin mode. Now we need to choose the leverage. By clicking on the arrow next to 5x, the leverage section will open, where you can select the leverage for your trade. How leverage affects profit in trades. Using leverage allows you to increase your potential profit. The example shows a chart where there is a 1% increase. If you do not use leverage, your profit will also be 1% of the size of your trade. In this case, with a $10,000 trade, your profit would be $100. However, if you open a trade with 5 times leverage, your profit will increase 5-fold, resulting in $500 instead of $100. The most interesting option is using 100 times leverage, where a mere 1% movement increases your profit by 100 times. So instead of $100, you would earn $10,000 in profit in this example. Thus, you can incorporate this tool into your trading strategies to unlock new opportunities. Margex offers leverage up to 100x on most trading pairs, providing significant trading opportunities for both beginners and experienced traders. In this case, we'll select 30x leverage. Now, using the convenient slider, we need to select the leveraged order size. The total size of our order with leverage applied will be shown in USD. Based on the selected leverage, the actual impact on our wallet will be 125.8 USD or 125.8 USDT. You can also see the actual impact on your wallet just below in the order cost section. In this case, we'll choose 25% or $3,174. To submit the order, click Buy for a long position or Sell for a short position. We're ready to proceed, so let's click the Buy Market button. A small window will pop up with an order summary. Finally, press the Buy button to confirm your order. The order will appear under Open Positions. For our second trade, let's open a limit order. Keep it in isolated margin mode. We'll select the leverage just as we did with the previous order. This time, we'll choose 30 times leverage. Next, we'll input the size of the order, $3,000 for this trade. We'll set the limit price at $63,600. To submit the order, click Buy for a long position or Sell for a short position. Since we're ready to proceed, we'll click the Buy Long button. The order will appear under the Active Orders tab until it's filled, at which point it will move to Open Positions. The order will be filled once the current price reaches the limit price we set. As soon as the price is reached, the order will be executed and moved to the Open Positions tab. Now that the trade is open, let's visually examine the liquidation price for our long position. You can find the exact liquidation price in the details of any open trade under the Estimated Liquidation Price section. Let's refer to the chart and mark the approximate level where our liquidation point will be. Since we opened a long position, we're aiming to profit from a price increase. However, if the price drops, we'll start incurring losses. And at around $61,530.50 on the chart, our trade will be liquidated, meaning we would lose all the funds invested in this trade. Now let's move on to the next type of order, the stop market order. A stop market order is a type of order that turns into a market order once a specified stop price is reached. It is often used to limit losses or to enter a trade when the price moves in the desired direction. Keep the isolated margin mode. Now, let's select the leverage as we did with the previous orders. This time, we'll set it to 20 times leverage. Next, input the size of the order. For this trade, we'll use $3,000. Then, we need to set the limit price, which in this case will be $60,800. To submit the order, click Set Buy Stop for a long position, or Set Sell Stop for a short position. We're ready to proceed, so let's click the Set Buy Stop button. This order makes sense if you want to open a trade at the best possible price when it reaches a certain level, either above or below the current asset price, depending on whether you expect an upward or downward market trend. In this case, we set the limit price and open a long position, meaning we anticipate the price will reach a certain level above the current price and continue to rise. The order will appear under the Active Orders tab until it's filled, at which point it will move to Open Positions. Now the trade is open. let's visually examine the liquidation price for our long position. You can find the exact liquidation price in the details of any open trade under the Estimated Liquidation Price section. Let's refer to the chart and mark the approximate level where our liquidation point will be. Since we opened a long position, we're aiming to profit from a price increase. However, if the price drops, we'll start incurring losses, and at around $60,736.50, our trade will be liquidated, meaning we would lose all the funds invested in this trade. What is the difference between long and short positions? Long position. The opening price is shown in the center of the chart. Everything above this price is highlighted in green, indicating profit. Everything below the opening price is highlighted in red, indicating a loss. In a long position, you buy an asset with the expectation that its price will rise. You make a profit when the price moves above the opening price. If the price falls below the opening price, you start losing money. Short position. The opening price is also shown in the center of the chart. Everything above this price is highlighted in red, indicating a loss. Everything below the opening price is highlighted in green, indicating profit. In a short position, you sell an asset with the expectation that its price will fall. You make a profit when the price drops below the opening price. If the price rises above the opening price, you start incurring losses. Now, after opening several long positions, let's open a short position. We'll demonstrate this with a simple market order. Select the leverage as we did with the previous order. This time, we'll choose 15 times leverage and keep the isolated margin mode. Next, we'll input the size of the order. For this trade, we'll use $7,470. Finally, press the Sell Market button to confirm your order. The order will appear under Open Positions. When you open a short position, you are betting on the market going down, which means you expect the price to move downward rather than upward. As with the previous orders, let's note the liquidation price level. You can check the exact liquidation price in the details of any open trade under the name Estimated Liquidation Price. Since we opened a short trade, the liquidation price will be higher than the current price. Any upward movement will result in a loss. In this case, our position will be liquidated at the level of $64,508.50. Now let's open a market order not with isolated margin but with cross margin. By default, the leverage is set to 100x. Just like in the previous trades, we need to determine the order size. In this case, it is $30,400. Next, we open a long or short position. In this example, we open a long position and click Buy Market. As we explained earlier in this video, the main difference with cross-margin trading lies in the liquidation price. Here, it depends on the collateral depth of your entire wallet. For convenience, there is an indicator next to the cross-margin level label that signals the current state of your open position. The cross-margin level indicators offer traders a simple way to monitor cross-margin trades without manual calculations. As more margin is used, the gauge fills up. A green indicator shows sufficient margin. The more the indicator fills up, the higher the probability of your order being liquidated soon. Liquidation occurs if the cross-margin level drops to 10% or below. When your cross-margin level is above 100%, you're in a good position. You can freely open new trades. However, if it falls below 100%, you won't be able to open any new positions until you top up your balance. And if the level drops below 10%, your position is at immediate risk of being liquidated, meaning it will be closed automatically to prevent further losses. To fully manage your trades, you can use the tabs located below the chart. All open positions are displayed in the window beneath the chart and can be closed by clicking the Market or Limit button on the right side of the open trade. If you select Close by Market, you can instantly close the entire trade or part of it at the best available price. If you choose Close by Limit, you can set a specific closing price to close the entire trade or part of it. Unfilled limit or stop market orders will be shown under active orders and can also be canceled by clicking the Cancel button. The Positions History tab displays all past open and closed positions, while the Orders History tab shows the history of limit and stop market orders. You can filter the trade history for the last 7, 30, or 90 days. In the upper left corner of this window, there's an option to filter data based on your preferences. To the right, there's a button to expand this window to full screen. Here, you can use convenient filters for specific coins, order types, and dates. Additionally, it's important to note that the entire trade section can be customized to meet your needs and provide the most convenient user experience. Each section has buttons or sliders that allow you to expand or close specific parts of the interface. On Margex, you can also use the multi-chart feature to simultaneously monitor or trade on 2 or more charts. This provides even greater flexibility for your user experience. To share your trade with friends on social media, hover over the Share button located to the right of each open or closed trade. In the pop-up window, you'll see your trade details beautifully formatted, along with your unique referral QR code, which your friends, followers, or social media contacts can use to join you. Thank you for watching. For better risk management, we highly recommend using the stop loss and take profit features. For detailed instructions on how to set stop loss and take profit, check out our next video tutorial.